What's good, YouTube family? What's good? What's good? What's good, IG family? So, it's your boy Don Bucks, host of Rappin Dough. And as y'all know by now, this is the home of finance and business conversations from a black perspective. Happy quarantining, everybody. Wait for my IG fam to tap in. Connection acting kind of okay, there we go. Yeah, so happy quarantining to everybody, man. Hope everybody's staying safe out there. They're talking about what they say, distance. You need 6 feet. Give me 6 feet. Now that's when that give me 6 feet, give me 3 feet. It's relevant now, but I ain't really uh feeding into the heavy propaganda and all that. Not saying that the viruses is is not of any significance and all that, but you got a lot of financial stuff going on. Like I was expressing the other evening on the last live, that a lot of people were saying that they was losing money, and you know how the stock market is performing. And one thing I want to dispel some of those, I guess I wouldn't say rumors, but misconceptions, because over the past 10 years, as I expressed, a while ago, I've been investing. So I've been doing a lot of reading, a lot of research. Um, and what I have come to learn is that wealthy people tend to, and people that are running towards the wealth or copying what the wealthy people do. Um, the theme is that they actually look for times like this. It's not like they don't bank on like hard times or whatever, but they look at these times as opportunities, because it's just like a pair of Jordans. Like if you see, a pair of Jordans come out, they 150 or whatever they are now, 200. But after they sell out, they about $300-400, right? So let's say you missed them and they go to $400. Then you come back a month later and now they was 190, 200. Now they 150. You more likely to cop two pair instead of the one pair like before. So that's pretty much how stocks are, and how people that are in the know look at stocks. So they say, "Oh wow, that company was $200 a share. Now it's 150. They coming in and they buying more than they would have bought, because it's an opportunity to buy something for cheaper." Now we're gonna go back a couple steps, because there's, like I said, there's some misconceptions of the stock market. Now, stocks, you say you're buying, we say we're buying stocks, we're buying shares, but what we're doing is we're buying companies. Now, stocks and shares represent a piece of a company, and that right there is what we need to grasp. Right there, we're buying pieces of a company. It's just like you can consider a business like an apple pie. Let's see, you got an apple pie, and it's cut into 8 slices. Each slice represents a piece of the pie, a piece of the company. So the more pieces of the pie you have, the more ownership in that company you have. So that's basically what you're doing when you're buying stocks. You're buying a piece of a company. So the topic of tonight, I was saying I wanted to touch on the narrative that people were saying that they are losing money in the stock market. Oh man, I lost $1,000 or whatever. You didn't actually lose money. See, the stock price is a representation of perceptions, what they believe, what other investors believe the company is worth. So that doesn't represent how good or bad the company is doing based off what their price is. So if you have, let's say for easy math, you have $100 invested in the stock, and the coronavirus kicked in, and now you see it went from $100 to $50. You didn't actually lose $50. Now that's a representation of how investors feel. That has no reflection on necessarily how well the business is doing. Okay, you can take an example of, see, you only lose money when you sell something for cheaper than what you bought it for. So if you never sold your stock, if you never sold your position, you didn't lose any money. What you lost is equity. Okay, and if there's any homeowners or real estate people in here that are familiar with equity, we can give an example of, let's say you buy a house and you own the house outright, and it's worth, you bought it for $100,000. Excuse me. And then, a year from now, the real estate industry is down, and now your house is only worth 50,000. Did you really lose 50,000? The answer is no. Why? Because you still own the house. You still have the same asset. Um, Same thing, because now you're still in position. Now, if you would have sold the house for 50,000, then you lost 50,000 because you bought it at 100 and you sold it for 50. So that's when you lose. Same thing with the stock market. If you buy ownership in a company and you bought $1,000 worth of this company and $1,000 worth of shares, and your shares drop down to 500, you didn't lose $500. You lost 500 in equity, but you're still in the position, just like you're still in that house. You're still in the position for when the market turns and goes back up and above. You only lose money if you sold your stock once it dropped to 500. See, if you sold the stock once it dropped to 500, then you lost $500. But as long as you're still in that position, you still own the same amount of the company. Okay. So that's the misconception that a lot of people have when their equity comes down. They believe that it's money they lost, but no, it's equity, just like in the house example. So as long as you keep your position in that company, your ownership in that company, you're still in position for it to go back to 1,000 and beyond. But if you sold it, you're not in a position anymore to gain or to lose anymore, because you done sold it now. So you're not even in position anymore. So keep that in mind. You're not losing money, because if you didn't sell it, you're not losing any money. You just lost equity in your position, but you're still in position for it to move again. So as long as you don't remove your position and sell your position or sell your house, you didn't lose any money. So I wanted to clear that out from Rip. Okay. And another thing I wanted to touch on, as far as what I was saying, how stocks are based off emotions and perceptions. Because as of right now, what we have going on is a lot of fear, right? A lot of fear and a lot of fear tactics coming across the news and whatnot. And my perspective now, for full disclosure, uh, for legal purposes, this is not stock advice. This is perspective and my experiences from being an investor for about 10 years. So with that being said, what we have going on now is the fear factor thing going on. So that's that's a perception. So when there's fear in the market, when there's uncertainty in the market, um, other investors, some investors sell for different reasons, but a lot of the reason is because of fear. And when there's fear and people selling their stocks, that's when the stock price goes down. Okay, when people are optimistic about a company and about the economy, prices go up because they believe in the company more. There's less uncertainty, so people are fueling the economy, so that makes the stock price go up. So what I was saying was earlier that people that are in the know look for situations like this. They look at these uncertain times as opportunities to buy more because stuff is on sale, just like the Jordan example I gave. So they looking at it as, oh wow, coronavirus is here. Stock prices are low, and my perspective is, you have a lot of people that are very wealthy and have influence over the media. I believe that they push fear to bring stocks even lower so they can take advantage of these cheap prices. Like they had this one guy um, I was speaking on the other day, William Ackman, I think that's his name, William Ackman, billionaire investor. He's damn near about to cry on whatever that was. I think it was CNBC, one of them financial channels I was watching. And he talking about, yeah, he was I'm looking out for my dad. I don't want my dad to die, and we need to shut down the country. And he passing off all this fear. Oh man, I thought I had my Instagram live on all that time. Um, that's crazy. But yeah, he's passing off all this fear, right? And it's like he want the prices of the stocks to go down because at the end of his spiel, like, yeah, he needs to shut it down now. How we gonna get rid of this virus if we don't shut the country down? And uh, it was weird. It was weird how he was coming, like how he was so adamant about um, how bad the virus was or whatever. Like I said, I'm not discrediting how bad the virus might be or whatever, but it was like he was pumping fear into the atmosphere, and but at the end of his spew, he was like, "Yeah, so I'm buying these stocks, right? Buying up all these stocks, penny on a dollar." I'm like, "Yo, why he ain't say that first?" Because I believe that these people that are in position that have this influence over a lot of people, um, they want to pump fear so they can get these prices down. Like I said, when there's uncertainty, when there's fear, people are selling, that brings the stock prices down. So why wouldn't they want? They got billions of dollars. Why wouldn't they want these companies to be pennies on the dollar so they can go in there and dump on them, like, and buy up mad companies for the low, or buy up mad pieces of companies for the low? Like, this is what they do. Like, over the course of my years of reading and investing and looking at all these investment books and doing my due diligence, this is an ongoing theme. That's why, in not one time in the history of the stock market over the past 200 years, not one time has the stock market crashed or reached a low that it hasn't recovered and went beyond. Not one time. Okay. So that's the stuff that we got to take into consideration when we're hearing the news and seeing all the fear that's being spread. I think it's an agenda behind it. I could be wrong, but history shows that it never stays down. Like, it may take a year to get back to where it was, but what's a year like? And that leads me to my next point. Like, if you do some research, research studies show that most multimillionaires don't become millionaires overnight. They don't become millionaires overnight. They built their wealth over time. And in order to be an investor, in order to invest in the stock market, that's one of the two things that are necessary: patience and consistency. If you can wait, if you can wait, because I made a point not too long ago that there's a lot of people that graduated from high school 10 years ago, but I bet it feel like it was yesterday. You know what I'm saying? 10 years went by like that. But in 10 years, if you're investing consistently, you can turn something small into something big. Okay. And I know that for a fact because I've been investing for 10 years. You know what I'm saying? I'm gonna leave it at that. I've been investing for 10 years and I know you could turn something small to something big. And if you keep doing it when you're elderly, maybe 70 years old, what you was doing consistently a little bit at a time, now you're a millionaire. Now you can pass something down to your kids. But this is how they do it. This is how the rich get rich. They they invest in um, real estate as well as in the stock market. Okay, there's different ways you can do real estate. That's not my forte per se, but I know for a fact that stocks, you don't have to be rich, you don't have to be super educated, um, and that's what they want you to think. Though they want you to think you have to be rich, and have to have all this education, but all it takes is patience and consistency. You know what I'm saying? And I was saying also the other day, $5 a day, even $5 a day over the course of 20 years or so, it'll be something crazy. You know what I'm saying? Because of the compound interest. That's a whole nother topic. But compound interest is like interest on top of interest. Um, but yeah, so um, you didn't lose money. You lost equity. You only lose money when you sell your position. All right, so keep that in mind. Now, I hope my IG is running properly because I could have sworn everything was copacetic with my IG. But um, if not, it's going to be uploaded on YouTube anyway. So this is not going to be a long show. I just wanted to touch on a few things. I got some notes here. Um, oh, another thing that's contributing to the fear factor. Like, and these are the things you can look for in the future to take advantage of what's coming down the pike. You got all these layoffs, you got businesses closing, you got events being canceled. All this contributes to fear. So this is how you can kind of predict and put yourself in position, take advantage of um, what these wealthy people have been doing for since forever. Um, but yeah, this is the stuff you can take advantage of the fear of people and whatnot. What's wrong with my connection? My phone is doing something weird right now. It's saying my connection isn't strong enough. My Wi-Fi is whatever. But yeah, so layoffs, businesses closing, um, and things of that nature are what contributes to the fear factor. And this is the stuff that you can take advantage of. When you see it coming, you hear it coming, you can hop right on it and start, you know what I'm saying? Um, Catching these stocks when they drop so you can buy. Um, but I can say that, out of all the different asset classes, that the stock market is the easiest way to start accumulating wealth. Why? Because you can buy ownership, and ownership is the only way to get ahead. I don't care what they tell you in school or none of that. Ownership. I mean, you can even check some of these rappers now. They now shooting for ownership. Like they want to own their royalties, and they want to be independent, because they realize now that ownership is the only way to get ahead. And that's in the music industry, that's in every industry. Ownership. You want to own. Okay, so the stock market is the easiest way to own and to start building wealth, because you can own a piece of a company for as little as uh, $30, $40. Okay, where else can you own a piece of a company for $30, $40? I'll wait. Pretty much nowhere. Okay, but in the stock market, that's what's going on. You can get a piece of a company, ownership in a company, for as little as $30 and $40. Because, for example, AT&T, uh, stocks in AT&T is um 36 $36 right now. 36, 37. Don't quote me on that, but you can get a piece of AT&T for 36 30 to $40 right now. So where else can you own a piece of a company for $30, $40? Okay, like I don't have nothing against real estate, because I'm actually getting into real estate as well, but those are the two asset classes. um, because of course with real estate, you're owning. That's ownership. um, you want to own. That's the whole. You want to own. Okay. um, but yeah, so that's the easiest way to build wealth, and that's one of the reasons behind the wealth gap, and how we say, yeah, it's a term, yeah, the rich get richer and the poor get poorer. Yeah, because it's not because every all the white people was born into wealth, but even though they do have an advantage over us, um, based off the history and stuff, but they know some stuff that we don't know, and one of those things is stock market participation. Stock market participation. But being that we're scared of it, because um, we think that we're going to lose money. That's why I had to come in here and dispel some of that. See if I can get my IG popping again. Um, that's why I wanted to dispel some of that misconception. Okay, stock market participation is one of the reasons behind the wealth gap. So the sooner we can start, I mean, you're not going to learn everything in one night, but I encourage our people to look into that, because not everybody has, that. Even though it's 3.5% down for first homeowners program, even though that's going on, or we have that available to us. Um, Not everybody has 10, 20,000 laying around, but I bet we do got $30 and $40 laying around. You know what I'm saying? We messed that up. We messed that up on a daily basis. Some people, most people. Yeah, IG don't want me to be great, but that's okay, because I'm going to upload this on I'm going to save this video. But what's another thing that I wanted to touch on tonight? Yeah, so the object is to buy these dope companies while they're on sale. Okay, it's like I will only and then I will recommend that you not just randomly pick companies that you kind of familiar with. Yeah, IG don't want me to be great. Let me figure this out. But you want to buy companies that you understand, not just buy companies because just because. Let me see if this one let me rock out. But yeah, so yeah, only buy companies you understand. So I hope I cleared up a lot of the misconceptions. Um, you don't need a lot of education. You don't need a lot of money. Um, and you didn't lose money. If you're already a stock investor, which I recommend that you become, if you already won and you're confused about how that works, I hope just rewind this back to the beginning where I explain how you're not losing money, you're losing equity. It's just like in a house. If you had a house, I'll just break it down right quick. If you had a house that you bought for 100,000 and it dropped down to 50,000, you only lose money when you sell it for that 50,000. But if you hold on to it and wait for it to go back up and beyond, you're still in position. So you only lose when you sell it for cheaper than what you paid for it. So long as you stay in position, you didn't lose your money. Your money is still there. Your position is still there. You still have the opportunity for your money to go back to where it was and beyond, because you still own the same house, just like you still own the same position in that company. All right, so I hope that cleared everything up. IG ain't want me to be great tonight, but it's all good. And if you haven't already, you can if you found this useful, hit the like and subscribe button. Also, you can follow me on Rappin Dough on IG, RAPPIN _DOUGH. And if you interested in investing, um, and you don't have a brokerage or investment account yet, you can also click the link in the description that says free share from Don Bucks in there, or you can go on my IG page and click the link in that bio as well, and it'll say free share. You get a free share of a company after you finish getting your account. It's self-explanatory, pretty easy. Get yourself a brokerage account and start investing. Start looking at different stuff. Um, the sooner you start investing, the better. All right. So with that, I'll see y'all next week. Happy quarantining. Wash your hands and invest. See y'all next week. It's Rappin Dough. Actually, no. See me next live. Peace.